I am going to look to fade this move. Again, calling out levels, this move from not that long ago this morning, 63.92, that's about a 0.7% move to the upside. So we've already had a pretty decent move. There's certainly more if we're going to get it, but trying to test those July highs. This is the SPY. We were pre-market around 639, now we're 638. Looking at SPX levels, based on the VIX today sitting around 15.3. This might increase, but around 15.3, that should put us just under 1%, 15.3. So about a 0.9596% move. So I'm going to take that based on the close from yesterday, and then also I'll do a modified one once we open, because we might still have some thrust to the upside, but I would imagine that this close up about 0.95%. So a 64.35, 64.35 to 64.40. Okay, and then I'd modify that based on a gap open. So this would be potential 63.35 to 60 or 64.35 to 64.40. And if we're going to open here, this is the previous day's close, go down, but based on this gap open, going down about 1%, probably puts us around like 63.50. So I'll just do based on the close, going down about 0.95 is 63.15. Okay, and then I'll modify this to see some higher levels. So my goal today is if we're gapping up, looks like we're still up around 0.4%, 0.5% from the close. That would have been your close from yesterday. And that pushes us up around 0.45%. Let's say we gap 0.45. So we're looking to open up probably around 6,400 or so, 6,400 to 6,402. And I'm going to try to sell in the highs. I'm going to try to sell like a 64.40, 64.45, 64.50, similar to what I did yesterday. If I can get some bear call spreads running, this would rely on the market to try to get to fresh highs. This is going to be kind of trade number one for my daily profit play alerts. We'll be selling up into this potential resistance. And also that's trade one. If we go higher, I'll measure that move and we'll base it off of intraday price action, maybe going higher to sell and scale in to make sure I can try to win the day. Okay, how did we do yesterday, by the way? Should have been pretty good. Standard daily profit play worked out nicely, grabbed about 50% profit, and then grabbed, let's see here, 195 out of 250. So 195 out of 250, about 78% profit. So all in all, two good trades yesterday. Happy with those. And nice way to start the week. CPI data today, we knew it would be a little bit disruptive. Market's gapping up. As far as the data goes this morning, what happened? I posted this in Telegram right here. So this is the reaction in futures. So we had like CPI news happen. There's a big bar on the S&P futures. So that's ES feed. You look at this, this is the actual data. So core CPI previous was 2.9, forecasted 3%, came in at 3.1. Okay, headline CPI previous was 2.7, forecasted 2.8, came in 2.7. So in line with previous, slightly better than expected. Market took a jump off that. I still think this is something we can fade. Nice, Dave. Dave, nice little $1,000 day, no big deal. Willard Standard 30 to 30% profit, love it. Very good. Very good, very good. Okay, let's go back to SPX. Let's go to the daily time frame. Okay. So July 31st high, August 1st low, even with the push up today in CPI, are we going to respect this same resistance level? This is what I have marked for the last couple of weeks. We had our July 31st, August 1st swing, traded inside of it all last week. So far, we're trading inside of it even with today's price action. If it can't break these highs, this is resistance, and we'll see if the market is just going to stay range bound from here. Okay, if it goes higher, then that's fine. I mean, don't I'm not calling the top here. Like I want to sell some premium today, but I'm not calling the top. If I can, look at the potential top for an intraday trade, zero DT trade, that's totally fine. Right? So if we open higher, there could be some pushing to the upside. So what I'll probably do is based on the open, I'll go to my appropriate delta and try to sell. If I could sell higher than 64.50, I would be fine with that. Okay. But just depends on what type of spread and risk I'm willing to take today. Also, this afternoon at 1 p.m. Eastern Time, I'm going to run workshop day one. We're doing double up alerts day one, day two, day three. So we have a workshop today and Wednesday and Thursday at 1 p.m. Eastern Time. Okay, we'll talk more about double ups in a little bit. I'm actually pretty excited to showcase a couple of strategies we've been taking for that. That gives us a really good opportunity for high reward, low risk. And we do that in a 0 to 1 day environment, oftentimes. Percent wide, how often is the gap fill? I mean, in the stock market, don't rely on gaps to get filled. There's a gap here that hasn't been filled for, a week. There's gaps that happened with the U.S.-China trade agreement gap back in June that haven't been filled yet. The gaps that happened with the U.S., that was the Israel and Iran ceasefire that haven't been filled yet. Like gaps in the stock market, if you want to look at price efficiency, look at the futures market. Look at ES, look at NQ. Okay, so that's like a 23-hour market. So you don't really have those gaps. What fills in the gaps is like price action actually fills in the gaps. If you're in the futures market, like there's going to be a gap here, but it's actually futures flows. So the market's moving. Gap fills. I mean, maybe an earnings gap here and there, maybe a post earnings gap, maybe supply and demand, but there's no real timeline and timetable on how often gaps get filled. In the currency market, very different. Currency gaps get filled because they rarely happen. You don't see a lot of currency gaps in a 24-hour market, right? But in stocks, I mean, there's gaps galore, and sometimes it's just a gap that ignites all the momentum to the upside and never comes back to fill the gap. So trying to trade a gaps is a silly endeavor when you're trading stocks. Okay, so we have about 22 minutes. I want to do a little bit more anatomy of a trade today. So we'll get into a little technical Tuesday. Things are looking up right now. Just right now we have futures up 0.35%. NASDAQ futures up 0.41%. Dow futures up around 0.38. And Russell futures are up 0.67. So everything pointed green today. Let's go bond volatility. Dollar index, pretty sideways. Currency strength chart right now in some currency land. So yesterday we had dollar versus Swiss. Today we have pound and Swiss on top. Again, pretty quiet volatility, 40 and 35, but pound Swiss getting a little bit of strength. Everything kind of turning up since this morning. JPY turning up a little bit. Dollar turning up a little bit. We'll see how the kind of the hierarchy flows today. Like maybe it started out strong with pound and Swiss, but if yen and dollar rise together, we'll see what ultimately this kind of usually like we see some crisscrosses where things start out weak and become, back to middle, start out strong, become back to middle. Maybe it's just like a convergence type day in currencies. We'll keep an eye on that. Oil still below the 65 handle. Support, I mean, it was 65. We had a lot of support here, $65 on oil, heading lower on increased production, possibly oil getting lower, 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 lower. If it does, I mean, $60 round number, $55 major support. I don't think it goes too much lower than that, but I mean, hopefully we see oil just kind of contained. I think for, no Middle East escalations, no tensions. We don't really want to see oil go too low. And we certainly in the U.S. here with inflation, as always, this potential like looming threat right now is like how bad does inflation get? We don't want to see energy prices go too much higher than like 80, $85 on oil. So I'd say if it just kind of bounces around here around 65, it's very tradable. If we bounce at 55, do we go from 55 back to 65? Maybe we find a new range here. But I think it's just a range bound instrument for right now. Natural gas retesting lows again. Like this is such a difficult position, but I think we kind of found a bit of a bull thrust off of this like 1250 support back in September of last year. This is like summer like July to September last year. So possibly a little bit of a push or squeeze coming technically on natural gas. Gold, announcement yesterday that we're not going to tariff gold. and gold dropped. So is that going to be the trend? Are we still range bound? I think we're still range bound for sure. Probably coming back to like 3270, maybe a bit deeper into like the 3150 handle. But I still like buying dips on gold, positioning on gold longer term to go up. Silver, I still like silver a lot. Technically, I'm going all the way up to like $48 on silver. So the way I'm trading silver futures, the way I'm trading Bitcoin, or I'm sorry, silver futures and SLV is targeting, what would be the all-time highs. So silver, $48, SLV all the way up to $44. And there's about 25 to 30% more upside there. And also really good dynamic support off these moving averages. Bitcoin tested the high, just shy of it. Maybe a little consolidation here, but just in the last couple of weeks, I mean, there's been some big commitments to buying Bitcoin. I mean, you're seeing countries doing it, you're seeing private equity funds doing it, endowment funds doing it. You're seeing it. This executive order gets put into place where 401ks can now have Bitcoin exposure. Whatever that looks like from a custodian side, I don't know. I mean, I've had plenty of 401ks, and they give you kind of limited options as far as what you can allocate to. So I'm curious, like what crypto a crypto 401k allocation looks like. If you're an employee going through a benefits presentation and they're like, oh, by the way, you can invest in Bitcoin. It's like, are they going to? Do they want to? Or are they just going to do a targeted fund that's like a blended mix? I don't know. Nevertheless, it's making real estate, private equity, crypto more mainstream, which I don't think is a bad thing, but it is not without risk. I just think people need to be aware of that. But I still like Bitcoin in the medium term to long term to still go higher. As long as we have risk appetite, I think Bitcoin continues to grow. If we have risk appetite and higher inflation, I think we have Bitcoin and gold that continue to appreciate. I think silver, being the kind of better technical and poor man's gold, continues to appreciate. MicroStrategy back above 400 bucks. Coinbase had a pretty decent correction after all that stablecoin news, so that was like inefficiency up, came back down. I still like Coinbase kind of staying above like 150. I mean, I actually might consider some ratio spreads there on Coinbase. Ethereum has had a heck of a run here. Got a nice trade in from like 2,400 up to 3,900. I didn't take this little surge to the upside. We are creeping up on potentially all-time highs in Ethereum at 48.81, around 48.75 all-time highs. Am I going to chase Ethereum? Absolutely not. I'm not. If we get to all-time highs, great. Congratulations, what a good trade. But I'm probably not going to do a bunch of allocation on Ethereum. Copper, still crazy man's game. I actually do want to price out a copper trade this morning, see if I can find one. Looking at like if we can keep copper above the April lows, I'm going to stay in copper. Just depends on the risk setup. And then non-US, hanging out around the all-time highs, and the German DAX, FTSE hanging out about the all-time highs. Argentina off of the 200 period moving average. China, bouncing off this 50-day moving average. Brazil above the 200 moving average. Latin America above the 200-day moving average. These are all non-US. Mags gapping higher again. S&P up. Apple led the mags last week. Nvidia has led the mags the last couple of weeks. These are all good things. Big announcement that China and Nvidia is going to be able to have sales to China, but they're going to be taxed at like 15%. So that's just Nvidia essentially stroking the government a check, which is kind of weird. That it's not a bad thing, I suppose, but it's like, how much love is the government going to get from all these companies? It's like, oh, you want to do business? Pay the government. It's like, that seems strange. And I don't know if that's going to ultimately lead into, we have earnings on NVIDIA around Jackson Hole this month. NVIDIA's up to some fresh highs again at 182. We're close to it, 182.40, up about 34 cents. I don't know. I'm curious how like NVIDIA earnings this month as well as Jackson Hole. That's usually a very odd week in the markets. I've seen the markets move, sometimes 2, 3, 4% during Jackson Hole. You throw earnings on top of that, could be a wild couple of days, could be a bunch of noise. But sitting here technically overbought with divergence on NVIDIA, wouldn't be surprised if we have some type of shakeout at the top and the market pulls back a little bit into this like August and September seasonality move. Apple still had that best month or the best week since 2020. Amazon, I still like Amazon long term. Broadcom still hanging out. Again, overbought conditions with divergence. Technically due for a correction. Google making a nice little run. Probably going to test all-time highs before we start registering some overbought conditions. Meta, a little island gap here at the upside. Possibly could fade and fill that gap. Microsoft, we popped high on that on the earnings report and we faded. I think this is a good one to scoop up some dips. If we pull back to like the 50 or 100-day moving average, I'll probably end up doing some trades on Microsoft. Netflix bounced off the 100 moving average. I'm standing at this one for right now. I'd like to see a little bit more dynamics into like the 200. And then Nvidia just talked about that one. Tesla 339 opened up a little bit higher at $5, 344. Is this possibly a wedge break? Is that possibly a wedge break? It's looking like it's trying to, right? Like it could still be sideways. One thing about kind of wedges is I still think it's sideways. This could still be resistance. This could still be support. It might run up here and get everyone excited, then come back down, maybe range a little bit. But I still think this is a structure that's like down, up, and consolidating. So down here for a trough, up here to consolidate, and the market is just building that accumulation. Then hopefully have Tesla go higher. Whether this is end of the year, whether this is like end of the year into early 2026, it'd be nice to see Tesla get back to all-time highs. So I think there's some good upside there. Okay. Um, I've got the levels here, Mark. So this is, and again, this is just the initial previous day's close. So I'll put a note here. That's based on the previous day's close. So previous day's close. And then I'll modify this once we have opening bell in 13 minutes because we're going to have a slight gap higher. And I'll still look at the VIX at 15.3 and see if I can, measure that move about 0.95% if we're going to get that from, intraday price action in addition to the gap higher. Okay. Berkshire bonds down. Bonds are down about 16 cents. 10-year yield on CPI data. Not much of a reaction here on the 10-year yield. Watching this one, I do want to see with CPI today if it changed the Fed watch tool. So we were like 88% chance of okay. So interesting. So we had an 88% chance of the rate cut. Now it's 94%. This is the highest I've seen in almost a month. So it looks like the market is already like, yep, we're cutting rates in September. 66% chance we cut in October, and then a 55% chance we cut in December. So markets right now, even with CPI data, haven't changed much, expecting 3 cuts by the end of the year. September, October, December. It would make sense in theory that this is a good thing for the markets to make the Fed policy less restrictive. I think the timing is appropriate because we have seen a bit of a slowdown in job numbers. The labor market, as far as like unemployment is still historically low, but job growth is slowing. So I think the timing is good. I don't know if the market's going to blow the top off because the Fed is cutting into this, all-time highs and valuations of these highs. It does seem a little interesting, but it's like Trump is ultimately getting what he wants. I mean, I know that he complained about the job numbers being rigged and it's a Biden guy and I'm going to fire him, but it ultimately did lead the Fed into a much higher probability of cutting rates. So as vocal as he's been to have, Powell gone and have rates cut, he's actually getting what he wants. So it almost in a blessing in disguise. It's like the weaker job number in July is almost putting the market to look at the Fed saying like they should cut rates. And right now it's being resembled in the probabilities. Okay, so that's good. Chris asking for recordings. Recordings are available because we do this in Zoom and we do this on youtube.com/financial wars. These recordings are available every single day. You can go to youtube.com/financial wars and you can look up the playlist Daily Profit Plan and you'll see all these sessions posted. Yep. So usually the first hour or so the segments are posted. Cool. All right, very good. Mark, you get on those guardrails? Yep, so we have about 10 minutes. My plan for the day is to see how high I can sell and just kind of let the day unfold. So again, respecting the resistance from July 31st, we could obviously get to this gap and then still push higher. I don't think the market should be like terribly excited about higher core inflation, but it's still leading to a higher rate cut probability. Again, I think it's silly to just call the top because this high on July 31st doesn't really mean anything. But if the market goes up to the high or through the high and then fades, doesn't mean it has to do that today. It could get up to the high, today or higher and then actually fade by the end of the week. We could still have. So what's going to be interesting is we started here and we closed red yesterday. So we're still red for the week, right? But if we open here and go higher, all of a sudden we turn green. Well, we had a green candle last week. If we're pushing green this week, I mean, it doesn't take much. I still think there's little momentum to like get this market to go dramatically higher. Okay. Alan says, when you do a spread at the top, how much premium you're looking? I mean, if I could pull in $1 to $2 on like a 10 wide spread, I'd be pretty happy with that. So if I do like a 10 wide spread, I'd try to pull in at least like a dollar to $1.50 if possible. And we might set that. We did that trade last week. I think it was on Friday. We set a 10 wide spread, got filled at a dollar, did another 10 wide spread, got filled at a dollar. Of that $2 max profit, I ended up grabbing like 190 bucks out of it. So we took like a great trade there. I think we ended up making like 150 or like 185 profit. Let me look at my tracker here. 115. So like 180, like 180, 185 out of those trades last week. So out of the max 200, I pulled in most of the profit. Not bad. Yeah, 205 pulled in 190. That was last week. So something along those lines. But to me, it's all about the level. I mean, I could see the VIX, we had the big drop during CPI. I could see the VIX just kind of staying noisy today between like 15 and 16. So kind of within that like 0.9 to 1% move. But based on what I have for my guardrail levels, tops are kind of around 6,450. Bottoms right now around 6,300. That's a lot. Like that's a lot of potential volatility today if we're going to get somewhere up here, somewhere down here. I will be looking at like the 50-day move or the 50-day 50% ATR. So what's my 50% ATR versus my 100% ATR? We gap higher. Does it hit the 50? Does it hit the 100? I want to be aware of those levels too. So there's kind of, we talked about this before, but like the guardrails. If we have a 50% ATR, that can serve as like a guardrail. My VIX level is kind of like the ceiling. So if I do like my VIX rule of 16, it's going to be, probably up. When we have intraday price action, it's going to be up higher than probably 6,450. Okay, which is going to be way up there, but that gives me plenty of wiggle room to have not just the previous day's close, but also a gap open and the intraday price action around 0.9%, which would give the market like a 1 plus, it'd be like a 1.3, 1.4% move on the day. We obviously know that's within the wheelhouse of the market to move, over 1%. I don't know why the market's going to be super excited today about higher inflation, but it is increasing the probability that the Fed's going to cut rates in September. Okay. So this is based on the previous day's close. Previous day's close, I'll put in a modification based on intraday price and put in a modified kind of top and bottom. I'm just going to focus on the top today. I think that's the easiest way to sell nice and high. I think there's a respectable level here around 6,450 that maybe we can get a decent amount of premium for it. I might start there and then just also scale in at higher levels. So that's probably my plan for daily profit play. So for those members that have the service, I'll be posting that here in Telegram in a few minutes once I find the levels that I like. And then for my double ups, okay, we're going to have a workshop today at 1 p.m. Eastern time. This is the trade that's all about high reward to low risk. There's two core strategies I want to be teaching today. And we'll space this out. We'll do lots of examples over these next 3 days. And hopefully we can find some key levels to price in. Okay. All right, what else on the technical side? We did gold, we did silver, we did oil, we did Bitcoin, we did the dollar, we did some currencies, we did some stocks, Mag 7, gapping higher today in CPI news. The next big data is going to be PPI on Thursday. That's producer price index. And again, we'll see like our producers seeing also higher prices, higher inflation. Are they going to try to pass it on to consumers? That's the big question mark right now. Right now, it seems like producers are the ones that are taking on the inflation and potentially eating that inflation and not passing it on to consumers. However, ask anybody out there how life is going as far as like, do you see things that are cheaper in life? I don't. So it's like costs are higher at 2.7% inflation, costs are higher. At 3+% inflation, costs are higher. Everything's higher. Services, right? Labor. And maybe this changes with this like AI shift, but we could be, a year, 2, 3 away from AI really kind of infiltrating like corporate America where everybody's using it. And so I don't know. I think the jobs front looks a little gloomy because maybe there's no job growth. Once we start implementing AI, We may not fire everybody, right? But we might not hire anybody. And that's always the big like unknown is like, what does this look like in 3 years, 5 years? But the market doesn't seem to care. Like right now, market doesn't seem to care. It's all about corporate profits. AI is changing the world. This is a tech revolution. This is as exciting and as frothy as what we had during the dot-com run up in the 90s. I think it probably ends with some nasty volatility and shakeouts in the market, but our job is to navigate that stuff. Okay. Randy asked a good question. So if SPX is going higher, well, again, it's already going higher based on a gap, right? So, okay, so let's say it opens right here, Randy, and it opens right here and then it falls. Why would I put in a bull put spread if it's going to fade? I mean, if it's going to open here and rally, that's great. But do you know that it's going to rally? I don't. What if it gaps higher and fades? A bull put spread is going to have risk, right? So what I look to do is if it gaps higher and I can absorb the rally, I'll try to sell it at a high price and stay out of the way. That would be the plan, right? Doesn't have to be a lot, but if I could pull in, 50 to $100 today, a couple $100 today, I'd be happy with that. And just do the usual grind. High probabilities. That's the plan. Yeah. All right. So we have 3 minutes. So let's see if this has faded a little bit. A little bit. 638.20, maybe up about 0.3 to 0.4% now. About 0.38%. So that puts our open somewhere around 0.38. So puts our open around like 6,400. 6,450 seems quite a ways higher. Market makers, let me log back into Tasty. It logged me out for some reason. Let me see what I've got for market maker moves today. So 6,450 might be a little high in the option chain. That we'll know this more like at opening bell because we're going to open up around like 6,400. So plus minus on the day is this might not be too bad, but a plus or minus 44. Again, a lot of that was because of implied volatility of CPI. So we got 11.2% implied volatility, about a plus or minus 44. We open up around 6,400. Well, obviously going up to like 64.44 is potentially inside the market maker's move. We could go higher, we could go lower, but I think if I'm selling at least a starting point at 64.50, that could mean good things for like selling nice and high. Okay, Greg, I'm not sure what that means. SPX is 21. What does that mean? You telling me volatility? I'll sign out, sign back in. 21 seems pretty high. We have a VIX at 15. I don't think we're going to have an SPX, IVX at 21. I've got like 11%. I'm going to log back into my broker platform to see. I had my computer on sleep mode last night because I was running some tests. Okay, 18.5. All right, who's got Tasty? Let me see if there's any. I'm just logging back in from scratch. All right, and it's opening bell, so markets are up. Logging back in. And then from this open, okay, let's go based on the open here. Calculate roughly about a 0.95% move or so. So about 64, I mean, between 64.50 and 64.60, if I can get some premium out of those, I'm going to sell. It may not be like awesome premium, but I'm gonna try to sell. Okay, so let's go SPX. I've got an IV rank of 14.7. I have an 18.5 IVX. Yep, so that did adjust. So now it's about a 23 plus or minus 23. All right, so I think my platform was stuck on yesterday's sleep mode. So there we go, about a 23-point move. All right, so I can get, let's get some deltas here. So a 64.50 is a 20 delta. I'm going to try to get $1 on this trade and $1 on this trade. So right now, collectively, I only get 60 cents. I don't love that trade at all. So I'm going to try to do a dollar, similar to what we did last week. I'm going to sell the 50 and 60 for a dollar. Okay, 50 and 60 for a dollar, and then 55 and 65 for a dollar, and see if I can get those two filled with credit. So we are pretty much at the 50% ATR for the morning. There's a lot of gamma levels. So 50% is kind of like checkpoint number one. We already knocked it off the list. So um, I don't know. I mean, I want to sell higher. I don't know. If we make a bit of a bullish run today, like getting up into the 50, 60, 70% ATR, I should get that 64.50 filled about a dollar. We'll see. Hopefully we do. Okay. Potential, top based on the previous day's close. VIX is around 15.33. Yeah, I'm just gonna let this marinate. So let me put this in the trade alerts here for daily profit play. These are gonna be pending orders. So new trade. Today's the 12th. Okay, I'm posting two trades inside daily profit play alerts. And I'm looking at the 64.50 to 64.60 area being firm intraday resistance. Okay, so on my gamma levels here in my ATR, 50% ATR up to 100% ATR, that 100% ATR gets me up to like 64.30. Again, another good level, right? Another good level to kind of look to sell some resistance. So if I'm selling at 50 and 60, it should be difficult for the market to stretch all the way up here. But price is pushing higher, which is a good thing. If I think that we are not going to just hang out all day at this level, like this is kind of in no man's land. So let me see if I can get like another daily profit play running in kind of that dead zone that we've talked about before. If I do I don't want to see it stick at 64, but maybe a 64 here and a 15. That'd be 15 wide. See if I get like 580 for this one. That'd be 15 wide, maybe 590. I'm gonna work on this one in a second. This is so 585. If it doesn't fill at 580, I'm not going to take the trade. Okay, markets are on the rally. That first credit spread is trading for about 50 cents. I'm not going to take the trade yet. I still want to see if that'll get filled for a dollar. I'll go from 85 down to 80. That's it if I take the trade. Is 80 going to fill? So that's trying to go 6,400 to 6,415 dead zone. Stay out of that. 580 is not filling. Hmm. It's in Telegram. It's in Telegram. It's in Telegram. Daily Profit alerts, members alert, right? I've got it both posted. SPX, they're not filled yet. So if you're not in my Daily Profit alerts program, you're not going to see the live trade, right? Like it's a Telegram channel for the members. Yep. Okay. Yeah. So those are my pending orders. They haven't been filled yet. I'm still watching. 58 cents, 40 cents. I need to see price go up a little bit higher. So price is going to work its way up into like maybe 64.20, 64.25, maybe hit the 100% ATR. That should be enough to get us filled on the trade. And I'm kind of looking at a ceiling here around 50, between 50 and 60. Okay, so let's see here based on VIX at 15.12. Initially, we had a 15.3. So about a 0.95% move based on the open. If anybody jumped in, like Randy said, and did a bull put spread, you're probably seeing some quick profit on that. But I would be aggressive on protecting that profit. So based on this, going up about 0.95. Yeah, between 64.50, 64.60, that should be my kind of top of the day. Okay, so if I'm going to sell high, that's where I want to sell high. I could maybe grab a bit more premium here at the 64.30. That trade's not filling at 80. I'm going to cancel that one. 64.30 is now trading at, that's a high delta. So I could go 40 by 50 for a dollar, 45 by 60. So I could pull in about $2 here. I do have some risk on this trade, but that at least gives me a premium that I'd be like pretty happy with. Let's see. 52 cents and 33 cents. I think this can push just a little bit higher. So by the way, the highs that we had last week were 64.27. So I kind of want to see what these premiums offer if we do revisit that high at 64.27. And so I'm going to hold off on this trade for a second, see if I can get a bit more premium. But this would be kind of selling above my calculated, previous day's close, VIX move, and see if we can stay here for the day. But if we try to poke this high, I'm curious if I can get filled on the trades that I want, which is selling the 50 and the 55. So up here. And if this one fills, even the 40 by 50 and 45 by 60, maybe pulling like $3, $4 credit, and this one wouldn't be bad. I'm taking some risk on this trade. But our 100% ATR is around 64.30. I just don't really want to call the top without knowing like we've got the VIX move here. And I think that the safer top to me would be like the 50 and 60 zone. So 64.50, 64.60 would be like the top, even though that is quite a stretch above these previous all-time highs. Okay, it'd be lovely to get this fill. We're trading at 65 cents now, 45 cents now, 70 cents now. We're at 64.15 SPX. I'd love to see this get up to like 20 or 25. 64.30 is my 100%. So based on the previous 5 days, a 100% ATR is around 64.30. That should get us filled at that dollar credit that we want. So I'm going to hold off for that for right now. If I did just see here, maybe this wouldn't be too bad. This one offers a dollar. That wouldn't be terrible. Let's see, 50. Okay, we'll see if that one respects the levels. Come on, keep pushing. So right now I'm cheering the market on a little bit to keep grinding higher. So previous high at 64.27 and we're trading at 64.14. So do we have what it takes to gap higher, have a little bit of momentum, keep grinding towards that July 31st high? And if we do, we run into a nice 100% ATR, some intraday resistance, and see if I can get filled with the credit that I want. But also my level is way up here. So my line in the sand is 64.50. So as long as price stays below that, hopefully I can still make, $2 and walk away with some profit. But if it goes up like this and fades, well, then I'm not going to get filled with the credit that I want. So I need to, right now, like I said, I need to cheer this thing on. So rather than settling for, you know, I mean, right now I get about 80 cents to risk almost $1,900. That's a terrible trade. So at least make it worth my while. I mean, risking just less than, I guess, $1,800 to make $200, but the probability of profit in my favor is much higher. So that's what I'm kind of holding out for. Okay. And that level at 64.50 is pretty big. So I'm going to do one more thing here. Let's see. That one is for, I'm going to change this to, if let's say we get to 45 by 65, that's 20 wide. Could I get filled on this one at maybe, I think 15 bucks I'd accept. So I'm going to put this in as a pending order again for daily profit play, 64.45 sell call and a 64.65 buy call. That's 20 wide, but I'm going to try to put into my broker platform. If price rallies up towards my VIX high of the day, it'd be a $15 credit out of a 20 wide. So I'd only risk $500 to make $1,500. Again, this one may not fill, but that's at least a good way to kind of battle out this market. So 45 by 65, 45 by 65. Okay, so that one, and this is 45 by 65 for 15. Okay, so pending orders there. All right. If two fills, we hold expiration. The plan is no. The plan is if we get filled, what I'd like to do is if I get filled for a total of $2 credit, if that $2 credit is trading down to, let's say, a dollar or let's say 50 cents, is take the profit. So I don't need to hold this all the way to expiration. Okay, what I'm continuing or considering settling on would be if we get up to 64.27, which is right around this 100% ATR. I want to see what my trade is trading for. I think it should be enough to get us filled. So we're trading at, gosh, it's only 60 cents right now, 60 and 30 cents respectively. So we need to push up like another 10 points or so, probably another 10 to 17 points. So I probably need to see price get to 64.30 today for these things to get filled, or at least one of them to get filled. So I'm going to hold off right now. I mean, we did exceed the 50-day moving average. That's what I was afraid of. I was wondering if this market was going to come up and then fade. Yep. Look at that thing. Whoo, baby. That is fast action. Look at that. This could be some noise. I don't know if we have some weird news coming out right now. It's 9:44. I don't know if there's something being said or tweeted. Traders welcome CPI. I don't think they know what they're doing. Just buy the market. That's all the market cares about. No, I did not. I'll post that mark for you. Yep. And then SPX 8/12 expiration. Okay, we have some noise. Okay, so let's see if the market can kind of grind off of this. But that just kind of deflated the bull puts right there. If anybody was long, what's happening, Larry? Yeah, I don't know. So we went from 95 I mean, SPY came right up to hit the July 31st high. SPX did not. I wonder if that's why the market actually faded. So they're not perfectly correlated, but SPY came up to test the high and then faded right off that resistance. SPX did not quite get there. There's the high from July 31st. So just off of that high. So I think we're just kind of, carefully dancing around this area. Do we hit the July 31st high? Do we fill this gap? Do we stay in no man's land today? Um, I'm just going to be patient this morning. I think one thing with these big news announcements like CPI and FOMC and non-farm payroll is it gives the market an excuse to move. So don't be silly. Like let the trades come to you. Don't force trades. If price does what I think it's capable of doing, I'm just looking at some of my levels here. Look, we're hanging out around the 50% ATR. If we have the ability to get to the 100%, my trade's going to get filled, which is good. And my trade is up here. So if I can sell premium and we can hit the 100% ATR, it's rare that we see prices go above that. So it should be a safe line in the sand. If we get filled for $1 and get filled for another dollar, that's $2 credit. And if price rejects off this level and falls lower, I can keep pretty much all that $2 credit. But if for some reason price starts to fall today, then I'm not going to get filled, and I'm kind of left like, now what do I do? Maybe nothing. Maybe I don't get filled the trade I want, and that's okay. Okay, Trump is tweeting. All right. I mean, that's like a given though. That's like an everyday thing, you know. So anyway, we'll see. I mean, if I wanted to kind of call the highs today, I mean, I might be able to get creative on a trade. 60, now it's up, it's 30 points higher. Let me see what the 30 looks like. So maybe the 40. Oh boy, this market's a lawsuit. South Park's right. I mean, we tested the waters with that weeks ago, right? I'm going to fire Powell. What the market do? It sold off 0.74% in 30 minutes. I don't know. Just just hang out. I'm not forcing anything. All right. Well, I mean, I appreciate everyone posting that. That's good looking out. But that doesn't mean I want to get reactionary and all of a sudden start doing something silly. You know, I mean, I don't want to call the bottom. The market's look, if it's something with Trump and Powell, the market's going to react probably adversely to it. So I don't think that's a good thing. But when that happened, if you recall, like it happened here. This was when the market was Trump's going to remove Powell. The market reacted very poorly, and then the market spent the rest of the day clawing back. So this could be noise. It could be like he's tweeting right now. He's saying he's going to fire him or sue him, and what happens? That's false. That's fake news, and then the market recovers. So just don't chase this stuff. It's too noisy. It's just price action. It's just a day trade. If it's a little sloppy, like I'm telling you, if you do something silly in a 0 day environment, the market will let you know. You know, like you think that you can trade a tweet and think you're going to get it right. It's too noisy and it's too sensitive. So I mean, if anything, if we're putting in a bit of an intraday top, that's 64.16. VIX has spiked up a little bit, so we're still looking at like a point 0.9 to 0.95. Maybe lows around like 63.50 today, but I would not call the bottom if we're going to see a higher VIX. Could I get like the 20 maybe? I don't know. I mean, see what I'm doing though? Like I went from a pretty solid plan to selling way up here to then potentially modifying, like basically calling the top now, which I don't really feel super comfortable doing. So if I'm going to call the top, I still want to have like a 30 to 40 top on the day. Let me see what like the 30-40 looks like. So 30, if I do 30 and 40 and 35 and 45. Let me cancel this trade for a second. So I can get $1.60 on this trade. which isn't a bad starting point, but 30 means we're up to like the 100% ATR, maybe noise on the day. Let's see. Let me see where this is at. This is right now like a 13 delta. All right, I'm gonna see if I can get a buck 80 on this thing. I think this is a bunch of noise. All right, buck 85. Let me see if I can get $2 on this trade. So we're trading at $1.80. I'm watching the mid price right now. Come on. If I can get this mid price up to like $1.90 or $2, I'll probably take this trade. I'm gonna go down a little bit, try to get filled at like a 64.30, which would be the 100% ATR. So I mean, there's at least a level of comfort there. I obviously like the 64.50 a lot better. I mean, the SPY hit the high from July 31st. SPX did not. We were still like 10 points away from that. So I'm just not going to force a trade right now. I think we've got some noise. Let price be price. There we go. This should be going up a little bit higher. Now we're at 175, 190. Let me see if I can craft a little fancy trade here. Let's go maybe a 64.30. That's still such a garbage trade. See if I can go after. Not going to get filled on that. All right. I'm going to see what happens if price can retest the intraday high. So I think we're dealing with some noise. We have a gap fill here. We're just above the 50 ATR. 100 ATR is kind of what I'm looking at, is if we go up, 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 up to retest this level. Maybe this is a range trade on the day. Try to sell at that 64.30 level. That'd be a good sell spot today. So I'd be willing to modify my plan to get something at 64.30. Okay, and then my backup plan would be the 64.50. So kind of level one, level two as far as trying to find some resistance on the day. There you go. So Dave said he got filled 64.30, 40. All right, so you're going 10 wide in the 64.30 and 40. That's a good fill. That's a great fill. So if I went 30, 40, 35, 45, yep, I'm seeing over $2 on that trade right now. I do like that trade. Let me look at my intraday. It's not bad. All right, I'm gonna see if I can get filled here for 210. Mids at 213, 211, 210. There we go. Just got filled at 210. Okay. So updating right now. Trades filled. So this one is going to be canceling, real revise. All right. So SPX, 812 expiration. Sell the 64.30. Buy the 64.40. Sell the 64.35. 64.45. 210 credit. This is the 100% ATR level for a bear all spread. This will be a level one resistance area to sell. I will also sell higher and more contracts for the 64.50, the 64.60 area if needed. All right, so trade is in. I got filled at 210 credit on that. So now I'm going to modify this one. Canceling will revise. I can't revise that. So I'm just adding this in Telegram. The pending order sell 6445 by 6465. All right, so I have one trade in. It's a combination trade. It's a bear call spread combo for $2.10. That's what I'm in right now. And this is actually pretty perfect, honestly. Getting filled for $2.10 and prices going down. I'm going to see some immediate profit on that trade. So if this goes down to fill the gap, that 210, which is a sell trade up here, so 63 or 64.30, if price goes down to some fresh lows intraday, that 210 should be trading for hopefully some profit. So let's go to SPX. 1, 2, 3, 4. So there's my trade for 210. It's already up 40 bucks. If I can turn this 210 into like 100 bucks or better, I'm going to take the profit, depending on what price action does. So now that we're doing that, we're just going to hang out and see what price does. Okay, Sean says, why don't you hold it close? Because it's 0 day, man. It's 0 day. 0 day, you have like 8 to 10 times the risk if you hold it to the close. You are either right or wrong, and at the end of the day, you have no wiggle room. So if I've got a majority of the profit in my fingertips, I'm going to take it, right? So right now it's like I'm up 40 bucks, and hopefully I should be up more because I'm watching live price fall a little bit. So let's go tasty. There we go. Now it's up $52. So if I can see this trading for over $100, I'm probably just going to take the profit. Okay. So if you missed the 210, Randy, unfortunately, it's probably already trading for like $1.50 or $1.60. You can let it marinate. You can put in an order, pending order at 210 or $2. If price does something like this, if price is down here and then it pops back up, you could probably still get filled at $2 or so. But your line in the sand is now 64.30, right? So I'm selling here for the 64.30. This is kind of my ceiling one, and then that second trade is still pending at a 64.50 ceiling. So I'm selling high. But if price comes down here, this 210 should now be trading for, I don't know, $1.30, $1.20, $1.10. If I can grab 100 bucks out of that trade, I'm going to take it. So let's see what happens. Let me set a chart alarm here at the gamma pivot. So we've got this 63.75. I'll set a chart alarm right there. See if we get there. And then check my combo trade, see what happens. And if this is the market's attempt to try to get to the highs but fail, then that's a good thing for this to still be a range trade. Okay. So initially, based on the rule of 16, I still had this as my potential top in the day. So I'm still playing within that rule, right? And then this is my intraday price action. So I'm still going to add more trades if needed. But if price is going to reject off of this and fill this gap, I should see a quick win on this bear call combo. So 210, I'd be happy to closing this thing out like $1 or less debit. Yep. If it enters the gap, it'll most likely go. I mean, if it enters the gap, good. I mean, I kind of want to see it go. We're pushing lower, pushing lower. If we fill this gap, I might just take the profit. Chart alarm set at 63.75. That's my positive negative gamma level. If we poke that, that's good. I think that should give me enough to hopefully grab like almost 100 bucks or more out of that trade. Okay. So let's give it some time. This seems to be like, there we go. I'm up 92 bucks right now. See that like quick move? Let me see if I can grab Almost up 100 bucks, 95. This is like being really slow for some reason. Price is cooperating, but my broker platform is a little sluggish. I'm noticing these are these are really slow to update. But I'm up 93 bucks. Price is pushing down towards that 63.75 zone. Let me see if I can close this thing down. Started trading for $1.20. Let's take this down to a buck. Try to grab $110 on the day. Okay, so I'm going to try to put a profit in there just over 50%. We're trading at 110 right now, so I'm up about 100 bucks. See if I can take this down to like 105 or $1 debit. So in the update, so I'm going to put this in daily profit play alerts. The bear call spread entry 210 credit pending close at $1 debit. Okay, so pending close at $1, that would give me just over, so 110 out of 200, that give me a 55% profit on the day, which I take. Okay, let me share one thing really quickly before we go into a little discussion on double ups, which again, just highlighting some of the schedule stuff today. So we're going to talk double up alerts, which is it's going to be two core strategies. Okay, it's all high reward and low risk. Okay, if anybody is interested in, you know, kind of what I'm doing between like spreads in the day, so like a bull put spread, a bear call spread, whether it's a debit spread or credit spread, I have a video for you. If you'd like to watch it, this is free for everybody. It's a 90-minute video. I did this live during my YouTube session. I'm going to post a strategy session search right here. Okay, all traders welcome. Let me see here. Is that a short or is that a real session? That is an hour and 26 minutes. I think this is the one. Let me play this for just a second. This is every YouTube guy, like a boy band. All right. Yep, this is the one. Okay. So this is a 90-minute strategy session. If anybody is curious on how to quickly learn debit spreads, credit spreads, long calls, long puts, watch this video. This is a great prerequisite video to get you more familiar with what we're doing on a day-to-day basis. You truly, if you understand this, it's pretty simple to think about how you can trade your favorite indexes, your favorite stocks, up, down, or sideways. Okay, so that is a link. I click that link, save that. Once we wrap up the session, if you have time to watch it today, it's a great session. In fact, I'd say watch it, come back with questions for tomorrow. If you have any, we can discuss that in anatomy of a trade. We can break down some strategies. But I'm talking about bullish strategies, long calls, debit spreads, credit spreads, ways to express. I want to make money if price goes up. Boom. I want to make money if price goes down. Boom. There's a variety of ways to do it for very risk-defined trades. Make sense? So check that video out. I'll keep that one handy. Okay. Now, VIX is kind of jumping all over the place. We had a couple spikes both directions. VIX is going back down. So we'll see what that ultimately gives us for price action today. I'm still going to keep my 64.30 level today and monitor. I'm going to see if price will maybe perhaps top out here and just kind of slowly grind back down to this this positive negative gamma pivot around 63.75. If it does that, my trade should be profitable. Okay, so I'll keep an eye on that one. Will somebody do me a favor as I switch gears here and start talking through some strategies? If we see price action this morning going back up to retest 64.16, I guess I can set a chart alarm. But will somebody tell me if we're going to retest like this area, retesting like the intraday highs today? So I'll set a chart alarm here at 64.20. Okay, and I know my line in the sand is 30 as well as 50. And if we break these highs, it's still possible that I get filled at the 60, this one here, so the 64, 50, and 55. These are still pending right now, but we'll see what price does. Okay. So Sean says our price on that one goes up as time grinds. Um, no, time doesn't grind, right? Time's not the grinder. Time is consistent. If price grinds higher, so here's how the trade works. If price goes higher, if price goes higher, I'm taking on more risk. If price grinds sideways, I'm seeing more profit. If price goes lower, I'm seeing almost immediate profit. So what we don't really want to see from the trade that I took this morning is if price goes up, I'm going to see more risk on the trade. Okay. But to be fair, I do have at least some room, some wiggle room. Like 64.30 is my line in the sand. So as long as price is going to like bounce around between the intraday highs and lows, like maybe the trade is fine and time works in our favor. But if price tries to make a new intraday high and tries to hit this recent high back on July 31st, I'm going to take some risk on that trade. Okay. So what I'm saying is, as I'm going to start talking here about some strategies and get ready for my workshop at 1 o'clock today, let me know if price is breaking this intraday high. I've got a chart alarm set at 64.20, so I do want to keep a close eye on that. All right, now, one more thing. On the intraday low, let's say that this market today just put in a low. We're still trading around a 15.2, 15.3 VIX. Okay, so I'm going to go 15.3. So we're still looking at like a 0.95% move. I'll take that based off of this little wick low. 0.95% is right around this like 64.45 to 64.50. Okay, so I'm going to modify. Let's see here. These still might work out okay. 50 and 55. I'll still keep an eye on that one. And then I might, let's see, 50. So what did I sell here? I have a 30 and 40, 35 and 45. So I'd like to sell the 40 and 45, but I've got those as buy levels right now, so I don't want to conflict that. The next trade would be, yeah, I'm just gonna have to keep it firm at like the 50 and 55 today. So I'm gonna try another 50 by 60 and try to get this one filled for, let's say, $3 credit. And the 55 and 65 for $3 credit. And a 50 and 60 and 55 and 65. Okay, so I'm going to play some defense here. I'm going to post this little screenshot in my Telegram. I'm going to take a screenshot of my broker platform. These are all pending orders. Okay, so when it says -1, so just so you can read my broker platform here, I'm posting this for daily profit play alerts. When it shows -1, that's a sell, right? So you see here, like the STO is sell to open, BTO is buy to open. So that -1 is a sell. The BTO is a buy to open, that's a buy. So that's a spread, that's a spread. I'm putting in pending orders. Okay, so I'm going to post this right now. Pending orders for the day. These are all based on sell high levels to play defense and see if the 64.30, 30, 64.40, and 64.50 levels act as solid resistance for the day. All right, so that's been posted inside Telegram. Ray, it's not bad. Just understand the risk. If you're getting $1.55, that means you're risking $8.45. Are you comfortable with that? A one contract trade, you're risking $845. If you're okay with that, 155 is a decent fill. If you want to hold out and see if it gets filled at $2, I mean, price goes up a little bit higher, you get filled at $2. But 155 is not bad if you're comfortable with that risk. Okay. So again, if you're in the daily profit play alerts, you can see those pending orders. I have a 55 by 65, 50 by 60, 55 by 65, and a 50 by 60. I'm just leveling in with some additional contracts and credits. Okay. All right. I'm going to switch gears here. Like I said, keep an eye on that intraday high. Watch the 6420 for me. I'm going to switch gears here because I want to prep you for the workshop that we have today. Okay. All right. Look, anything that I'm trading in my services, it's live money. I'm always trading live. I'm putting my money in line. I've got client money in the line. Like I trade live. So there's no ifs, ands, or buts about anything I'm trading here, sharing win records.